The Chartered Financial Analyst designation, CFA, is one of the world's most recognized and respected qualifications for investment professionals. Earning the CFA charter is a signal you have the knowledge and skills needed to thrive in the investment industry. Completion of the CFA program provides you with a strong foundation in advanced investment and analysis, portfolio management, and real-world skills like financial modeling and artificial intelligence. The program is also designed to ensure you understand the importance of ethics and professionalism in the investment industry and how that benefits society. So how do you earn the CFA charter? The CFA program consists of 3 exams. Each exam requires about 300 hours of study time. Most candidates complete the entire program within 4 years. You earn the CFA charter by completing the 3 levels and attaining the relevant work experience. It is the highest distinction in the investment industry and means you have earned the right to use the letters CFA after your name. As well as being globally recognized by employers, completing the CFA program gives you a competitive advantage in the job market and increases your earning potential. Whether you are
สวัสดีครับขอต้อนรับทุกคนสู่หอประชุมสุกรีแก้วเจริญหอประชุมอเนกประสงค์ที่รองรับการใช้งานในหลากหลายรูปแบบตั้งชื่อขึ้นเพื่อเป็นเกียรติแก่กรรมการและผู้จัดการคนแรกของตลาดหลักทรัพย์แห่งประเทศไทยคุณสุกรีแก้วเจริญ
หอประชุมแห่งนี้ตอบสนองการใช้งานที่ครบวงจรสามารถปรับพื้นที่การใช้สอยได้หลากหลายเพื่อส่งเสริมกิจกรรมการให้ความรู้ด้านตลาดทุนการเงินและการลงทุนและเหตุการณ์สำคัญที่จะเกิดขึ้นที่นี่หนึ่งในนั้นคือการเปิดการซื้อขายหลักทรัพย์วันแรกที่เข้าสู่ตลาดหลักทรัพย์ค่ะ
หอประชุมนี้ตั้งอยู่บนชั้น 3 ของอาคาร B ทุกคนจะขึ้นมายังหอประชุมนี้ได้จากลิฟต์โดยสารและบันไดเลื่อน
และเพื่อให้ทุกคนพร้อมเสมอเมื่อเกิดเหตุการณ์ฉุกเฉินขึ้นณหอประชุมแห่งนี้เรามาทำความเข้าใจการปฏิบัติตัวในกรณีฉุกเฉินเช่นเพลิงไหม้กันนะครับหอประชุมนี้มีทางออกฉุกเฉินรวมทั้งสิ้น2 ทางเมื่อได้ยินสัญญาณแจ้งเหตุเพลิงไหม้แบบนี้อย่าตกใจนะครับให้ลุกจากที่นั่งและเดินไปที่ทางออกฉุกเฉินเพื่อไปยังบันไดหนีไฟทันทีถ้านั่งอยู่บริเวณด้านหน้าเวทีเราจะเดินไปทางซ้ายข้างเวทีแล้วไปที่ประตูหนีไฟด้านหลังเวทีแล้วเดินลงไปที่ชั้น 1ครับ
แต่ถ้านั่งอยู่ด้านหลังของหอประชุมแบบนี้เราจะออกทางประตูหลักไปยังประตูหนีไฟที่อยู่ข้างลิฟต์และเดินลงไปถึงชั้น 1เช่นกันค่ะ
กรณีประตูทางหนีไฟไม่สามารถเปิดได้ให้ทุบกระจกให้แตกระบบ Access Control จะปลดล็อกและเมื่อเราทุกคนเดินไปถึงชั้น 1แล้วให้ออกทางด้านหลังอาคาร A ไปรวมตัวกันที่จุดรวมพลปากซอยอยู่เจริญ 6ตามผังนี้นะครับและก่อนกลับอย่าลืมสแกนบัตรจอดรถอาคารเราอนุรักษ์พลังงานและเป็นมิตรกับสิ่งแวดล้อมทุกพื้นที่ปลอดโฟมและขอชวนทุกคนลดการใช้กระดาษและพลาสติกรวมถึงช่วยกันแยกขยะด้วยนะครับ
สวัสดีค่ะ Welcome to CFA Institute Research Challenge in Thailand Final Round. I'm Sutrat Hong Thong. I'm the Senior Society Manager of CFA Society Thailand and your moderator for today's event. The Research Challenge is a global equity research competition that tests the research skills of university students worldwide. The challenge is organized by CFA Institute and CFA Society Thailand. Each year, more than 1,000 universities from around the world are participating. And this year, we are proud to have Global House Public Company Limited as the subject company for our local competition. Out of 20 teams from 13 universities that embark on this journey this year, only 4 have advanced to this final stage, demonstrating exceptional research and presentation skills. Today, we seek more than just strong writing skills. We are in search of a team that excels in clearly explaining the ideas to people, presenting the findings, and answering tough questions confidently. By the end of today, we will be selecting the best team that will represent Thailand in the regional and potentially global rounds. On behalf of CFA Society Thailand, we wish to express our profound gratitude to our esteemed sponsors. Their support has been instrumental to the success of this competition. Starting with Bloomberg for their invaluable ongoing support as our data service provider, enable our participants to access world-class research tools. Capital Market Development Fund for awarding CFA exam scholarships to the 4 exceptional teams who have made it to this final round today. This opportunity not only recognizes their hard work, but also encourages their continued pursuit of excellence in the field of finance. Third, Getnakin Patara Securities Public Company Limited for the sponsorship of 50,000 baht for the winning team today, a testament to their commitment to fostering the next generation of finance professionals. 4, the Stock Exchange of Thailand for hosting us throughout this 5-month competition. Their sponsorship of the venue has been critical in bringing this event to life. We are also immensely gratitude to all CFA shareholders who have dedicated their time and expertise as mentors, graders, and judges. Your contributions have allowed us to provide a rich learning experience for all participants, shaping the future of finance with knowledge and dedication. Before we begin our final round, please join me in giving a warm welcome to the President of CFA Society Thailand for opening speech. Please welcome Khun Sornchai Suneta.
ครับ Good morning, distinguished judge, participants, and everyone joining us today. It is with great honor and excitement that I stand before you. At the final round this year's CFA Research Challenge, hosted by CFA Society Thailand, this year it has been remarkable participant with 20 teams from 13 universities across Thailand. The team had dedicated themselves over the past 5 months to rigorous research, conducting interviews with the company management, and sharpen their presentation skill. This journey to this point is a proof to their dedication, skill, and the highly caliber of financial education in Thailand. Today, presentation represent the top of all their hard working. Each team will showcase their analysis and investment recommendation for Global House Public Company Limited. It is an opportunity not just to demonstrate their understanding of the company, but also the ability to think critically and present their findings convincingly to our panel of distinguished judges. This year, we hold particular significance as it marked the second research challenge we have been able to host on site and open to the public since the pandemic. The energy and enthusiasm we see today underscore the importance of coming together to share knowledge and experience. I want to remind the participants that regardless of today's outcome, be proud of the fact that you have been the power to rise above any situation and deliver the best result no matter the circumstance. The experience is more than a competition. It is stepping stone into the world of finance, offering a glimpse into your potential career and the impact you can make to the industry. I hope the journey of the past 5 months have been enriching and enlightening, giving you insight into the financial sector and inspiring you toward the future goal. We anticipate seeing many of you become professional into our industry and hopefully joining our network CFA charter holder in the coming future. My sincere gratitude go out to CFA charter holder who have generously volunteered their time as a mentor, as a creator and judge, contributing to the success of this competition. Your dedication to nurture the next generation of the financial profession is truly commendable. I also wish to extend my sincere thanks to the Research Challenge chairperson, Kun Pasawut, and the entire team of organizers and the staff of CFA Society Thailand. Your tireless effort and coordination have been important in making this competition a success. To all our participants, I wish you the best of luck today. Many this challenge be valuable learning as well and a stepping stone to achieve your professional and your aspiration in the coming future. I would like to thank all of you and let the final round begin. Thank you.
Thank you, Kun Sonchai Suneta, for your inspiring welcome. Our event is currently being streamed live on the Research Challenge in Thailand's Facebook page. We warmly invite you to share this moment with your friends and networks on social media. Next, let's discuss the rules and meet our esteemed judge. Today, the 4 finalist team will showcase their work. Our panel of expert judges will evaluate these presentations. The team with the top score will be our winner and move on to represent CFA Society Thailand and Thailand in the next round of the competition. Now I'm honored to introduce our distinguished judges. All of them are well-known professionals in finance, and they bring a wealth of experience and insight to our competitions. For our judges today are, first, Dr. Andrew Stars, CEO of A Stars Investment Research and former president of CFA Society Thailand. Kun Manita Puvatanaset, Assistant Managing Director of Corporate Finance Department, Kietnakin Patra Securities Public Company Limited. Kun Pacharachai Putikun Sathit, Investment Analyst at NT Asset, covering ASEAN with key focus on Thailand and Vietnam market. And lastly, Kun Vasin Paritan, Managing Director, Definite Investment Advisory Security Company Limited. They are volunteering their valuable time on Saturday for our event today. So thank you very much. So now let's go over the rules for the presentations. Each team will have 10 minutes to present, followed by a 10-minute Q&A session with the judge. As we approach the end of each segment, we will give a 1-minute signal from over here. So speakers, do us a favor and make eye contact. Otherwise, he would just keep waving that side. All right? So, and we will also signal once more when the time is up. It's important that everyone stick to this time limit and stop right away. After the Q&A, there will be 5 minutes for judge to provide feedback and recommendation. This feedback is for your growth and to improve your performance in the future and won't affect your scores. To maintain fairness, we refer to teams by letters today, rather than universities' names. And we ask everyone to please keep universities' names confidential during the presentations. And to reduce distraction, please keep noise to a minimum, avoid moving around the room, and turn off your mobile phone. เพื่อไม่ให้เป็นการรบกวนผู้เข้าแข่งขันและคณะกรรมการนะคะทางสมาคมขอรบกวนให้ทุกท่านนะคะงดการใช้เสียงนะคะปิดเสียงมือถือแล้วก็ลดการเดินเข้าออกระหว่างที่มีการพรีเซนต์อยู่บนเวทีนะคะและเพื่อให้การตัดสินเป็นไปอย่างยุติธรรมทีมพรีเซนต์ทั้ง4ทีมจะใช้ตัวอักษรแทนชื่อทีมนะคะโดยที่จะไม่ใช้ชื่อมหาวิทยาลัยจนกว่าผลตัดสินจะประกาศค่ะจึงขอความร่วมมือทุกท่านนะคะไม่ให้แสดงสัญลักษณ์ของมหาวิทยาลัยระหว่างการแข่งขันค่ะWe are now ready to begin the first presentation. Could we kindly ask all participating teams B, C, D to step outside the room? Except Team A. Team A, you stay. All right, and once each team has completed their presentation, you are invited to remain and watch the following presentation. And thank you for your cooperation and the best of luck to all the teams. So let's begin our first team, Team A. Come and get ready. Feel free to begin your presentation whenever you're ready. We will start the time when you do.
In an intense competition of the construction materials and home decorative modern trade retail industry, one stood out as having the highest market share in the upcountry and the most outstanding profit margin compared to its peers. Welcome to the world of Siam Global House. Good morning, distinguished audience. Today, we issue a buy recommendation of 19.5 baht per share with a 17.6% upside, supported by 4 key value drivers: a favorable growth environment in Thailand and ASEAN, a shift in customer behavior and increase in their spending power, an achievable company growth plan supported by the company's strong balance sheet, and lastly, being the best cost provider while having a superior ESG program. But before we delve into our key value drivers, let's take a look at the company's business model. Being a one-stop shop stores, Siam Global House revenue segment can be broken down into home decorative and construction materials, with its strategy being organic horizontal growth integration. It also has subsidiaries and holdings across countries in ASEAN, and in Thailand, it dominates the up region of the country. Now, let's look at our first key driver. The construction industry in Thailand is surging, with investments in mega projects such as EEC Phase 2 and transportation infrastructures, all driving our forecast real price projection. Our customer spending power is also increasing, with rises in agricultural prices across the board, a 20,000 baht farmer subsidies policy, and 3 years debt suspension. All of the aforementioned key variables are highly correlated with Siam Global House stock performances. The same story could be said within ASEAN, with Thailand urbanization rate at 57% in the lead of the pack, signifying that there's ample room for other countries in ASEAN to catch up, also supported by the fact that Asia is the second fastest growing construction industry region in the world. There is also a notable shift in customer behavior, where it drives a 5.8% CAGR in modern trade retail growth, supported by the increase in Thailand population of younger demographics and our team survey, showing that the older generations than Gen Y are also preferring modern trade stores also. So, what's next for the company?
Through third key drivers, Global's total target store expansion for domestic and international are aimed to reach 147 stores with 39 new stores by 2025. They are targeting the untapped demand near the residential areas in the second and third tier districts that are low penetrated by other rivals. Furthermore, the growth plan is achievable due to the sufficient capex higher than 10 years average with an average cash adequacy ratios of over 1 times, together with a stronger balance sheets compared to peers, which further enhance its loan capacity. Moreover, it has superior automated storage and retrieval system in terms of numbers and space reduction, which help optimizes for space-constrained environment for the strategic expansion and shorten the payback periods by 2 years. For the fourth key drivers, Global's best cost provider strategy help boost the margin by having the most branches, product varieties, and lower cost product import from Guangxi allow for competitive pricing. And the result of the survey also shows that 28% of over 800 respondents prefer Global House for its location, cheaper price, and product varieties, with 70% are identified as the repeated customers. Globals also emphasizes ESG by being the first to fully install the solar rooftop in every store. And socially, they are helping the local technicians to get jobs with the Shangdi application. And lastly, the WACC is adjusted considering the corporate governance excellence leading to a 0.32% decrease. Therefore, the excellence in ESG program result in the ESG premium of 4.5%. So after we discussing all the competitive advantages, we anticipate the Global House market shares to grow from 32% to 38% by the end of forecasted periods.
Let's put story into the numbers. The revenue is projected to grow at 8% CAGR in the next 5 years, supported with the same store sales growth, with the plan to accelerate the store expansion across both domestically and internationally. Also, with the rise in modern trade, in which Global House strategic location coverage surpasses competitors, and their best cost provider strategy enable Global House to capture the competitive prices. Consequently, the net profit margin will push forward by 11% from 2023 to 2026 as a result from, first, the rising proportion of house brand sales. Second, Global House generate higher sales with a lesser employee, emphasizing the efficiency. Third, achieving a higher profitability by capturing the potential upward trend of steel price. Fourth, mitigating the cost to the depreciation of Chinese yuan. And lastly, the cost-saving program of solar rooftop that can reduce the cost by 300 to 400 million baht per year, which will also result in a better efficiency overall as the superior ASRS improve the inventory management. And with the double distribution center, the inventory day is expected to decrease onward. Also, with the early payment to supplier, result in receiving the discount to lower the cost of goods sold by 1 to 3%, reinforcing our competitive edge in the market. Now that we know that Global House is a good company, this is a good investment.
We do believe that good valuation is a bridge between stories and numbers. Let's start with some of the part DCF. We calculated the price per share across 7 businesses delineated with the countries it's operating, which we projected each revenue segment separately, considering its distinctive characteristic of cash flows, growth rate, and risk profile associated with each individual business unit. For instance, the steel revenue in Thailand is derived from the forecasted steel price, multiplied by the market size, derived from these key drivers. The market shares are projected using SWOT analysis adjusted with the team market survey. Lastly, the new store will be aligned with the management guidance as well as located the potential stores to capture the future demand and minimize cannibalization effects. The cost structures are projected to be in line with the sales, adjusted with the corporate strategies and its cost-saving programs. The capital expenditure is split into growth and maintenance. Operating working capital is forecasted to be in line with the corporate strategies. The bottom-up beta were calculated based on different peer groups for different business nature and capital structures, resulting in varying discount rate. We used long-term GDP growth of 3% as terminal growth rate, since it shows high correlation with the stock performance. To support this F, we apply the relative pricing model of these multiple compared to the peer averages, and all the results show the underprices. We also incorporated the irrigation model to support the multiple approaches as well, and our results still show under prices. Furthermore, the stock is currently trading at the multiple level, being under its historical averages, a strong signal suggesting a buy. Overall, it seems to be a good investment. Is there anything which you concern?
Yes, there are several risks that the company may have to face. Intense competition, steel price fluctuation, and exchange rate are the key concerns. Starting with the fierce competition, as retailers are expanding their stores rapidly together with the price wars, especially on the house brand products, this could lower the overall market share of Global, so it would take around 9.4% fall in the market share to change our recommendation. The mitigation is to implement the best cost provider strategy together with the strong supplier network. Next, the fluctuation in steel price, influenced by the economic condition. It would take around 32.7% decrease in the steel price to change our recommendation to sell. The mitigation is to manage inventory strategically by stocking the steels according to the market demand. And last, exchange rate. Since Global also operates abroad, so it is exposed to the currency differences, especially Chinese yuan, as most of the house brand products are imported from China. The mitigation is to engage in hedging strategies such as forward contract together with the company's stronger bargaining power. To complete our analysis, we ran 100,000 times of simulation, suggesting 72% supported our buy recommendation with a target price of 19.5 baht per share and the upside of 17.6%. These all result from the favorable environment fostering growth, shifting in customer behavior, achievable growth plan, and the company's best cost provider strategy. Now, it's time to build a strong foundation to your portfolio. Thank you, and now the floor is open for your question.
All right, thank you. There's a few questions that I have. I'm just going to ask them quickly and just get a quick answer on them. The first one, you mentioned about mega projects, right? My question is, are they selling to mega projects?
The macro project is like the additional potential upside for the company.
Are they supplying mega projects? Is that what this business is? Okay, okay. The other thing is you have a falling CapEx, and most of the time companies increase their CapEx. If you assume that your CapEx is rising instead of falling, how does that impact the valuation that you've come up with? And the second one I just want to ask in relation to valuation is you're going up to a 12% net margin, which seems a bit high. If it was 10%, how would that affect the valuation? So CapEx and net profit margin.
For CapEx, we project into two segments. The first one is the growth CapEx and the maintenance CapEx. For the growth one, we align with the management guidance that plan to expand 7 to 9 stores, and we multiply with each store use 220 million baht. So if the CapEx is going up and up, it will affect the valuation to drop down a bit for the intrinsic value. Also with the net profit margin, if we reduce from 12 to 10, it will also reflect the intrinsic value of the company.
Hi, I have a question about your market share assumptions. Can you redirect the slide back to the market share slide? Right. Now, this is your assumption. You forecast that their market share is going to increase from 33% to 38.5%. Can you explain it to me, like I'm 10 years old? How is this going to, what's driving this? What Global is doing much better than their competitors?
Right now, the growth of the industry overall is around 2%. And with the proportion of market modern trade industry is eating up the traditional trade market share. Therefore, as we are the company having the strategic store expansion and their best cost provider, so they penetrate into the area that in the upcountry sub-district, so they can capture the potential growth in the new market area as the competitor yet expand into that area. Therefore, it will boost the market share into 33.5%.
Thank you. And my second question is this. So it's related to the net profit margin questions that Mr. Andrew just asked. So what is driving such a big increase in the net profit margin? And in your assumption, what is the proportion of your private label sales, house brand?
We run the sensitivity, and the most important key driver is the strategic store expansion. And with the margin increasing, it comes from the increasing of the house brand sale. From right now, we have 24% of house brand sale, and will increase to 30% within 5 years. And this house brand product, they have a high margin, relative high, compared to non-house product by 15%. Therefore, it will boost our net profit margin the most. And for our assumption for the label product, it about yes.
No, you already answered the house brand. Right? So this is a real question. Do you think house brand is a magical solution to everything related to their profitability? Is there any risk or downside from keep increasing the proportion of this house brand sales?
Thank you for the question. Let me take that. Actually, yes, there are some risks of having their own house brand, since some of the products, the customer, they are really brand loyalty to that particular products. For example, television. There are, for example, like LG, that we cannot do our own product, since the customer trust in those brand quality than our house brand. Therefore, if we choose to do that house brand, it will lower our top line.
On top of that, with the major of product of the house brand we import from China, about 90%. So if there is a fluctuation in the Chinese yuan, it will affect our intrinsic value.
Thank you. I have a few questions. Perhaps the first question is on how you incorporate ESG elements into your valuation. Just wonder, I noticed that you sort of incorporated, for example, the discount in WACC. If you were to remove those ESG elements in your fundamental valuation approach, would your recommendation change?
Thank you for your question, Khao. We incorporate ESG into our valuation by doing 2 separate valuation models, one without the ESG project and one with the ESG projects. And the premium, as you see on the screen, comes from the E&S, comes from the cost savings from the solar rooftop initiative from the company, and the Changdi project, which helps the local, and the CG SSWAC, which from the research from Mavurapa, suggesting that if you have good corporate governance, it will reduce the WACC. And by removing the projects, for example, the corporate governance adjust with WACC, the result will still show a buy.
On your analysis on the risks, particularly on increasing the portion of the house brand, and you also discuss about the mitigation would be the hedging part. Would that reflect into your expense forecast, the cost of hedging, the transportation expense arising from importing house brand from China?
Can you elaborate more on the question?
In your analysis, you said that because you have exposure to yuan, so the mitigation plan is with the hedging. Just wonder whether such mitigation plan was incorporated into your forecast, i.e. the hedging costs.
As right now, the the Chinese yuan, the economy of China is corrupt, have a bad condition right now, and the Chinese yuan is right now is depreciating. So right now we don't have any hedging strategy as the company gain a benefit from the depreciation of Chinese yuan.
What about exposure in other currencies that the company is expanding elsewhere in neighboring countries?
So like, for example, in Myanmar, like right now there have like some political issue in the country, so that would also like definitely affect the business there. Like maybe like the store in that particular countries, they cannot like operate as usual. So we ran the sensitivity and it shows that the depreciation by 10% of the like in the exchange rate in Myanmar, it would affect like lower the intrinsic value by like 0.02%, and it's still recommended a buy recommendation.
You mentioned a bit on, you touched a bit on steel prices, since it's affect a lot on revenue, but it's very difficult to forecast. Can you go back to how you forecast the steel price, and have you have a look on farm income relationship with the revenue of the company?
For the steel price, we forecast based on the Fitch Solution research. As the steel price movement will be moved from the bottom to hit the peak cyclically 3 to 4 years. And right now, as the Central Bank of America and around the world start cutting the interest rate, and it will stimulate the economy, and it will boost the steel price to go up as the higher demand of the steel in the market.
And for the second question, can you go to slide farm income, please? Thank you. Okay, we forecasted the farm income to increase since the Thai economic recovery and the production output recovery from the having the.
Time's up.
Thank you, Khab.
Thank you, Khab.
All right, now we have a 5-minute session for feedback and recommendation from the judge. This will not affect your score.
I thought you did a good job, so that was good. And as you can see, the Q&A is the toughest part. You've got to really be strong in the Q&A. I asked you the question about the mega projects because it didn't seem like it perfectly fit. So make sure when you're presenting that things are fitting as close as possible. I didn't get a chance to push back on all the ESG bullshit stuff that I saw up there, but it's probably going to be seen in all of the other reports too. But there's a lot of things you need to be very careful about. For instance, the solar panels. I'm sure that they probably save money by doing the solar panels. So is it a business decision or is it ESG? Also, reducing the WACC may sound great in an academic environment or for people who believe in ESG, but for other people, we know that that's really probably playing a game. So those are some of my feedback. Otherwise, good job.
Feedback is about the presentation. So I know you're nervous. But it's very clear in your the pace of the presentation. It's way too fast. I'm familiar with this company, and I'm struggling to keep up, to understand what you're trying to say. It's like your slide is just like a flash. You just skim through, fly through all your slides really fast. I mean, your slides are pretty good quality. Spend a little bit more time. You don't have to talk about everything, and if you were to get to pass into a regional round, this is very important as well. Talk about the important things. Ignore the rest. Let them ask. If they don't ask, it's fine, right? So it's way too fast. That's my point. Slow it down, right? On the Q&A, I think there's a good rationale behind most of the answer. There's a good data backup. overall, I think it's a pretty decent presentation. Good job.
So for me, thank you for the presentation. Very good and very fast, as Jeff mentioned as well. I think in terms of presentation and the key message that you should actually focus, because you try to, put everything and speak about everything. So the key main drivers of your analysis, you should have spent a little bit more time explaining the key driver. For example, SSG growth. We don't really catch that during the presentation. On ESG element, I think you put a lot of effort in trying to do the analysis on the ESG part, but it's more toward the valuation rather than, really the impact, in the societies and the environmental. So ESG doesn't really only means quantitative numbers. You also need to think about, what would be the benefits for the society as a whole as well. On Q&A, you try to defend your analysis pretty well, but I feel sometimes that the answer is not so solid. It's just more on the direction, which is pretty straightforward, too straightforward, and it might not really address the question from the judges.
I admire your effort to want to quantify ESG, but it's very challenging in that front, in my view. But it's great that you've done it. And apart from, actually, my very big comment is just like what the gentleman just commented before. You did it very fast, so it's very hard to really catch up. My additional comment would be, perhaps you have to challenge your assumption that you took from management in terms of, regardless of, in terms of like store expansion or target cash cycle. So you have to, don't just trust them and then try to, justify or those assumptions from your point of view as well. Thank you.
Just one more quick one. It was a little bit confusing at times when you said we or our, as if you were talking from the perspective of the company. Make sure you're seen as a third-party analyst analyzing the company separately, okay?
All right, well, thank you for your presentation. You are welcome to stay and watch the next team. Welcome, Team B. Feel free to begin your presentation whenever you're ready. We will start the timer when you do.
Global House, an upcoming leadership in home improvement company. Despite its notable growth, we are here to uncover the company's fundamental challenges, and therefore we issue a sell recommendation with a target price of 13.2 baht or a downside potential of 19%. This will be supported by 3 reasons. First, the company facing growth challenges in its main playing field or the upcountry. Second, the declining or unattractive returns to shareholders. And lastly, the expiration of the anti-dumping policy, which causes a downward trend on steel price and drive as a key catalyst. But most importantly, our valuation reconfirms an overpricing of the company. Starting with the company's overview, Global currently holds 83 branches across Thailand with a market cap of 82 billion Thai baht. The product offering includes decorative products and construction materials, where steel takes up to 15% of the revenue. In terms of positioning, Global targets low to middle income homeowners with a 10% contribution to contractors. With this in mind, Global has 3 key strategies. First, they're pushing for house brand, the expertise in upcountry, and the ASEAN's expansion. When looking at the sustainability aspect, Global has made an excellent contribution to social responsibility by contributing to 2,500 local technicians and supporting the local community. However, for environmental, despite Global integrating electric forklifts in their operations, it still falls short compared to peers who utilizes electric vehicles for deliveries. In terms of governance, there's a concentration of ownership due to 2 major shareholders, the Siam Cement Group and Surya Wanagun, controlling up together to 66%. This means control of all key operations, potentially reducing minor shareholders' influences. In terms of the industry analysis, home improvement businesses are currently facing an unfavorable condition due to an upcoming decline in housing demand. This, for short-term challenges, this is due to a high loan rejection rate for a 91% highest household debt to GDP and a 2.5% interest rate, which is highest among the 10 years. For long-term challenges, this is due to a demographic shift as birth rate in Thailand is declining.
Starting with the first point, Global faces growth challenges. So in retail, success often hinges on either improving sales per store or expand the store network, when fortunately, Global has failed in both areas. Looking in terms of revenue per store, you can see a decline trend from 700 million baht to only 400 million baht per store. This suggests an ineffectiveness of selling strategy. And when it comes to expansion, the firm effort has been on the lowest end compared to industry peer. These 2 factors has already hurt that growth, with the CAGR dropping from 12% to only 5%. So now the next question, would the decline trend continue? And our answer to you is yes, because if you look at their expansion strategy, they prioritize going into Tier 2 and Tier 3 market that has smaller construction output. So that means Global is walking toward a smaller market. Well, not only that, but there's challenges here. 1. In order to get revenue per store at the same level, Global must capture 16% market share per city, and that is twice its current state. And 2, such a high traditional trade barrier that often wins people's heart. So from all of this, we expect revenue per store to continue dropping. Moving on to international income, the first type is company operated. It's still in initial state as they have only 3 stores. The second type is a holding company joint venture with SCG. They invest in home improvement retailer across ASEAN, also appear to be an insignificant contribution at only 5% to total profit. Now let's look in each invested company. Start off Indonesia. You can see the revenue CAGR has been less than 1%. And in Laos, the main driver has already passed the peak point. In Myanmar, with the ongoing war, it's erupted as a key risk. So from all of this, we still expect low contribution from international.
Looking at returns, we are seeing diminishing returns for global shareholders in the foreseeable future. Global's ROE underperforms industry average with a downward trajectory expected. We anticipate all contributions of ROE to slow, namely net profit margin, asset turnover, and equity multiplier. Starting with the net profit margin, we analyze that margin booster house brands will slow, as it has reached 24% of revenue, which is at the level where peers in more developed markets slow. Moreover, competition arises as e-commerce players now offer the same product from China, and their revenue suggesting that they are cashing up in the home product segment. Leading to the root cause of low asset turnover, Global's inefficient inventory management is evident in its 223 inventory days, one of the highest in the world, and drags on returns. And without a substantial change in policy, we foresee the low returns will persist. Leading up to the important question, why now? An expiration of a policy will catalyze the rate of share price. Anti-dumping is a policy which prevents foreigners from dumping imports in Thailand. Now, Thai steel market is likely to be dumped and cause a downward pressure to Thai steel price for 3 reasons. First, China will export excess capacity of steels as their property crisis continues. Second, previous labels were discontinued. And third, anti-dumping were expired, considering Thai free trade direction. Now, and that will lead to an influx of imports, putting a downward pressure on steel price. Let's look at impact. Global same-store sales growth sees 93% correlation with steel price, as they are fundamentally related. When steel price decreases 13%, same-store sales growth decreases 5%, and margin contracts 75 bips. Turning towards sentiment, 7 out of 9 times when steel price falls, share price falls. Now, the expiration will take effect within 1 year, so we recommend that you sell now.
On to the key part, our valuation reconfirms an overpricing of the company. After translating this key rationale into financial, we project Global's revenue to grow at only 3.4% CAGR, driven by low same-store sales growth and capabilities of new store sales. We also project the cost to maintain at the same level because of the house brand product contribution and the expiration of the anti-dumping policy. We value Global using 5-year discounted cash flow model with 6 key drivers. And with the 7% weighted average cost of capital and 3% terminal growth, we arrive at a target price of 13.2 baht, representing a 19% downside. And when looking at the current business model valuation, it doesn't support by the market price. Global's forward PE premium to peer has significantly widened from its historical average. This divergence illustrates a clear current mispricing of the stock price and the business fundamental. And when looking at growth, Global's PEG ratio stands at 2 times highest compared to peer. And to confirm our DCF, we also compared to other multiples using relative valuation methodology. We created 4 criteria in selecting our peers, mainly on their business model, company size, and operation environment, deriving the price range that is in line with the DCF.
With a target price of 13.2 baht per share using a discounted cash flow model, we simulate a bull and a bear case scenario. In a bull case, where GDP growth is better than expected, the steel price surges, and the company could improve its efficiency, this increases our target price to 15.5 baht per share, still a 5% downside. Moreover, we also consider 4 investment risks, and after plotting to the risk matrix, we prioritize these key risks. The government stimulus package could improve its same-store sales growth in short term. Therefore, it increases our target price to 14.9 baht per share, still a 9% downside. And to sensitize the investment risk, and to sensitize the valuation risk, we conduct a Monte Carlo simulation with the subjects of weighted average cost of capital, GDP growth, and steel price. The result shows 76% of the simulation indicates a sale recommendation.
Now, despite Global's strong past performance, the market has overlooked the company's growth challenges, the declining for shareholder returns, and the expiration of the anti-dumping policy. And therefore, we believe The best of global is history. Its price today is no victory, and thus we're telling you to sell this stock now. Thank you.
Okay, can you go to the ESG page that you had? So one of the things is that some people, some investors see concentration as good because it means that the family or the company behind it sees it as significant. So that one I have a little question about. The other one is that provide job opportunity. Is this like they're spending money on, they're losing money on this, or are they making money on this?
Sorry. Yeah. To answer your question, so for the concentration of shareholders, we believe that two major shareholders holding over 60%, that entails control of all key operations. So we believe that with minor shareholders only holding minority in the company, we believe that that gives control to only two shareholders.
Okay, and then about this job idea.
Regarding the second question, which is the social responsibility. So what Global did was actually helping the local community by providing jobs opportunity for local technicians.
So I'm just trying to understand this, because capitalism is the way we provide jobs in an economy, not ESG. So I'm confused about this. So I'll leave it at that. I had just one other thing. The argument that you made is a good argument about additional stores that are coming on are less valuable, basically. But I'm not so convinced by that argument for two reasons. The first, from a business perspective, that's always going to happen. You're going to open up in the most profitable areas first. And the second thing is, it seems to me like that may be already in the price, like people already know that. What would be your response to that?
Okay, so since Global, after have cover high base branch in center area, the next step for Global, they prioritize going to tier 2, tier 3 city, which is different than other competitor, that they still going into the main town with a smaller format, such as Do Home, they have Do Home to go, but as Global, they stick to the same large format of 20,000 square meter, even though they're going into a less profitable city. So we think that suggests that Global will get smaller revenue per store.
And just to add on, we believe that it has not priced in because the market now believe that growth will continue. They're still bullish on growth. And to answer your previous question, we believe that by giving more job opportunities, it signals to the employees that the company care about them. So better customer service.
Hi, my question is, it's an open question. So because your recommendation is to sales, and you want us to sell now, right? Because there's a negative catalyst coming in. But there's a lot of things that will impact the whole industry, right? Not just them, right? Now, my question scope down to what is actually under the company control. So in your view, right? What can company do over the next 12, 24 months, or let's say 3 to 5 years, whatever the time period, to make you wrong, right?
I would like to answer your question. So can you go to dividend payout? So if you can see here, the RE. So if the company actually, now they are currently paying dividend payout around at 34%. However, if they increase that dividend payout ratio to match with other players like HomePro, who pays around 80%, this will increase their ROE and will attract, and this make this stock more attractive.
Okay, that is the capital management strategy. What about the business strategy? Let's say if the company were to announce something tomorrow, what kind of announcement, what kind of a strategic movement that would make you change your recommendation immediately?
Okay, So there's two things. The first thing that if company announce to a smaller size format, so if a smaller size, hence a more ROE continue, or ROE going to happen. The second factor that company can announce is the aggressive expansion strategy. Since they only announce only 5 to 6 store per year, if they come up next year and say they're gonna open 12 store per year, that definitely could boost the overall revenue.
A few more questions from me, particularly on your SSG, your forecast on SSG. You believe that the SSG will continue to drop, particularly from the expansion of the new store in up countries. In your assumption, have you factored in any improve in economic condition that could help boost SSG store of the existing stores at the moment?
To answer your question, the numbers in 2024 and 2025, the same-store sales growth declined because of two main factors. First, the steel price expiration of anti-dumping policy. This also decreases the same-store sales growth. And second, the market competition among the competitors. This and accounting this will decline the same-store sales growth. And when looking in the future, the economic condition that could improve same-store sales growth, we account for the GDP growth, but we expect global cannot improve its same-store sales growth. Therefore, we have a same-store sales growth of only 0.3% in 2026 to 2028.
Okay, and my second question and probably last question. You also mentioned the competitor that the same-store sales growth will also have impact from the increase in competition. In your view, what would be, why you think that global cannot compete with other competitor? Is there any strategy of your competitor, the global competitor, which is better than global strategy at the moment?
Yeah, so for two reasons. The first being that e-commerce players now offer the same products, and margin booster, like I mentioned, house brand is very important, and they offer the same product. And when right now Chinese manufacturers, they can sell the same product and these intermediate retailers, so they can afford to reduce their margin because they don't have to sponsor their store format. And second reason for it, in terms of existing competitors such as Do Home Pro, we think that the store format, their store format fits with the demographic shift more, such as Gen Y or Gen Z, which is upcoming.
Would like to add on what's different than global and other peer is the value proposition here. So after analysis, we found that global marketing strategy is more toward traditional, despite Home Pro and Thai Wasadu toward more of the modernized. And also if look in terms of credit card partnership, which is very sensitive to lower end people, global has the lowest number of partnership compared to peers.
Perhaps that's, I think that is that the reason that they wanted to go further into tier 2, tier 3 cities, why other competitors don't want to go to. You think is obviously the market, the market value is smaller in those cities, but don't you think that the competition with traditional stores is easier if you keep expanding stores in tier 1 city and keep compete head to head with other peers, big box peer? Thanks.
Thank you. So definitely take that into account. We've looked into more developed country on where's the cap of traditional trade store, and we found the cap of modern trade is around 60%, and currently in Thailand, modern trade is around 50%, so there's a little room to grow here. And the second reason of traditional trade, we believe it in the behavior of Thai people that more owner bond and family business, so we think that there's still high barrier here.
Thank you.
have 20 seconds left. That's it? Okay. All right, well, thank you. Time is up for the Q&A session. So now we will have a 5-minute session for recommendation and feedback. And this will not affect your score.
It's not working. Oh, it's working. All right. So I think it's a good presentation overall. Good pace, good pose, easy to understand. You open up with the clear rationale, key drivers, why you wanted to sales. So that's a good part. Now, some suggestion. It's not much of a criticism, but I think you're being too harsh on the company. I know your recommendation is to sales, right? But it doesn't mean that you have to sort of like find flaws in everything they're doing, right? This is obviously a good company, right? Personally, I think it's excellent company, well-run company. The problem is with valuation. So the tone and the message that you send out, right, can be slightly different, right? You know, it doesn't have to be, oh, this is bad company, it's going X growth, you know, there's nothing they can do to turn this around, negative catalyst coming in. Even ownership, which is a controversial point, like Andrew just mentioned. You got to be very careful with that because, yes, there's a concentration of ownership, but a lot of people like that, you know. The owner has skin in the game, right? He will do everything in his power. This is his baby. He will do everything in his power to make sure that this company survive and prosper. So be careful with that. It doesn't have to be all negative, right? Yeah. Okay. And this is more like a suggestion going forward. So you identified, you're very good at identify a big word like macro trends, you know, which is kind of easy to relate it for, especially for the regional round as a judge. There's some. You identify e-commerce, you identify difficult overseas expansion, steel price, which is nice. My suggestion is that there's another impact, which is cannibalization. You didn't mention that, right? So opening up into the smaller province, smaller, you know, neighboring province to the existing stores will cannibalize the existing stores. So that's my suggestion. Overall, good job.
Yeah, I would agree with JB that this was a good presentation. There's one of the things that you did that was kind of interesting was that you talked pretty slowly, even though the slides were going. Some of you guys talk slowly, even though the slides were going quite quickly. So I think that's a good thing. Always try to figure out how to slow down and less information. I did like the negative catalyst that you had in relation to the story, but I do think that you need to keep reinforcing that and talking about that that's the reason why it's a sell now. And to what JB said about, you know, negative comments about the company, I remember when I was a young analyst, I remember reading or hearing someone said, there's no such thing as a bad company, only a bad price. So I think positioning yourself relative to what consensus is saying and looking at that is one safe way to do it. It doesn't mean you can't criticize the company. Don't feel like you can't do that. But, you know, there's really a price issue here. So those are some of my suggestions.
Yeah. Good presentation, good content, good pace. And you really focus on the key factors, which is easier for the judges to digest. On governance, I think everybody has the same thinking. Perhaps it's not bad to have, you know, a concentration in shareholders. Actually, majority of the company is only one person holding like 60-70%, right? But when you look at the governance, you need to look at how that shareholder plays in the governance structure down below. For example, independent directors, so forth and so forth. Yeah. So that's a small comment there. On the analysis, I agree with your, you know, comments on the negative factors, but sometimes it feels like it's a bit short-sighted. I mean, it's an, you know, eventually the company would need to take care of the impact, right? In your recommendation to me, it seems like you think that the company might not have capability handling those issues, right? So that's the comment when I hear, all the factors is a bit short-sighted. You should take a longer view on those economic factors. On Q&A part, very good. I like how you split among yourself, which is like very equally balanced. Just a small note that even though it's good to focus on the very key points, another key factor is driving the valuation is actually on the margin. You didn't really touch on other factors that could help them increase the margin. A lot of initiatives that they are doing at the moment probably also have a positive impact on the margin improvement as well.
Great presentation, and even though I don't quite agree on governance part as well, but you have a clear thesis, very clear thesis to sell your idea as well. So great job. Thank you.
Okay, thank you so much for your presentation. So that will be the end of your presentation. So feel free to stay for the following presentation in the next team. And we will take a 15-minute break. Snack boxes are available for everyone at the reception desk for you to enjoy. So please remember, do not bring food and drink in the hall. ข้างหน้ามีสแน็คบ็อกให้ทานนะคะ เดี๋ยวเราจะพักกันสัก 15 นาทีนะคะไงรบกวนทานอาหารแล้วก็น้ำด้านนอกได้เลยนะคะห้ามเอาอาหารกับน้ำเข้ามาในห้องนี้นะคะ ขอบคุณมากค่ะ
ฮัลโหล
ฮัลโหล ฮัลโหล
ฮัลโหล ฮัลโหล
ฮัลโหล ฮัลโหล ฮัลโหล ได้ยินปะสูงอีกเหรอ ฮัลโหล ฮัลโหล
ฮัลโหล ฮัลโหล
test test test
test test
hello hello
ต้องใกล้ๆหน่อย
do you hear me
The competition will be resuming shortly. We invite all attendees to please come back inside the hall and find your seat. Thank you for your cooperation.
test test
test test
All right, so we're about to start. Welcome, Team C. You guys ready? All right, everyone, so please take a seat. And feel free to begin your presentation. The timer will start when you do.
Siam Global House is not only poised to improve homes, but is also poised to improve shareholder returns. We issue a buy recommendation for Siam Global House with a target price of 18.7 baht and a 14.7% upside. Global is a leading home improvement retailer in Thailand with a market share of 4.9%. The company sells both the construction materials and home decorative items with its 83 stores widespread across Thailand, concentrated in the northeastern region.
Let's move on to the home improvement market. We can see that this market has gone slower, but there is still an opportunity for modern trade in this underpenetrated market. This is proven by a material decline in market share of traditional players due to these three competencies of key players. As a result, we believe only players with all of these competencies will continue to capitalize on this long runway of replacing traditional players. Therefore, we issue a buy recommendation on Global based on our three investment theses. 1. Turnaround potential in global strategic region. 2. The long runway of expansion. And 3. Expanding margin through optimization. Let's start off with our first investment thesis. We expect Global to deliver same-store sales growth at around 4% during the next 2 years. This is supported by, first, acceleration of Thai economy, and 2, uneven recovery across all regions. Thailand will be one of a few countries able to show material GDP improvement in 2024. This should be driven by the return of both private and public consumption, as you can see from this highest level of CCI, along with the ramping up of government disbursement after April 2024. Let's move on to the second argument. We believe Northeastern will deliver the strongest recovery, and Northeastern is also the global strategic region. This is supported by, first, the resilience of agricultural sector. We see the highest level of water reserve will ensure that the agricultural product will grow strongly in 2024, leading to a strong, robust in-farm income on this particular region. And the second argument is the back-on-track government spending on this region. We believe after the budget bill is approved, this region will fully enjoy the benefit of both short-term stimulus and long-term massive infrastructure investment.
For our second investment thesis, we believe Global will achieve 38 additional stores within the next 5 years. This is supported by proven success in Tier 2 and 3 districts and its exclusive capitalization on these areas. The successful expansion of Global into Tier 2 and 3 districts is verified by the improving ROIC. We will use Khon Kaen province map to exemplify this strategy. This strategy helps Global to deliver a satisfied performance by mutually benefiting Global and customer. Global can set higher price while customer save time and travel distance. Second, enabling Global to incur lower capex per store and lower employee wages. Moreover, while other players are competing for market share in Tier 1 district, 46% of Global stores are competition-free from key competitors, allowing it to focus on capturing market share from less competitive traditional stores. Then we conduct an analysis on every district in Thailand based on store density, population density, and purchasing power. We found that there are more than 203 districts suitable for expansion, with 140 of them being Tier 2 and 3 districts, which mainly play by one player, that is Global. Additionally, we believe Global will enjoy this exclusivity for at least another 5 years, since we have not seen any sign of other players shifting to play in this field. And if they do, it will still take time for them to shift their business model to play in this field. Thank you.
Moving on to our third thesis, we anticipate Global EBITDA margins to reach its new highest level at around 18% by 2028. While there is a strong correlation between Global margins and steel prices, our margins projections won't rely on steel. This is because steel prices have stabilized as currently trading around their average level. Instead, our margins projections will be driven by increased private label sale and improved operational efficiency. First, Global has proven itself to be superior to its peer in margins. One of the reasons is that it has the highest private label sale, which boosts Global gross profit margins and help offset the impact of the steel. We anticipate that Global private label sale will account for 30% of total sales over the next 5 years. Furthermore, Global can reduce SG&A by implementing automation in order to decrease the number of employees per store. Therefore, we believe that the combined impacts of increased private label sale and labor automation will drive Global EBITDA margins to around 18% by 2028.
Moving on to ESG, Global establishes exceptional ESG oversight by being the only company among peers with a subboard committee overseeing ESG. With its higher percentage of in-house solar power to total electricity use among its peers, Global can reduce its emission by almost half, while also increasing its utility savings. Global focuses on generating value for both its customers and the community it serves. Moreover, minority shareholders are protected through boards equipped with acquired expertise, strong board independence, and dedicated commitment. Thus, leaving Global with excellent ESG performance, rated AA by the SET ESG rating. With this fact in mind, Global establishes interest and trust from 6 ESG funds, constituting around 10% of its total shares.
Next is the valuation. The main driver is uplifting in consumption and the store expansion, resulting in revenue growth over 13% CAGR in the next 5 years. And for the assumption, we derive back at 7.4% and terminal growth rate of 2% conservatively. Next, our DCF target price is confirmed to be sensible as it aligns with auto valuation method in this football field, and now Global is trading at 1 SD below its historical average line. So next, let me tell you why Global has very limited downside risk. The answer lies in its long-term initiative investment and its well-prepared strategies. As you can see in this slide, Global strategy helped them to hedge against most of the risk, and only delay in expansion and consumption risk can impact Global performance. However, it's unlikely to happen as the slowdown period has passed already. During the pandemic, Global has been able to cultivate the rich cash on hand, allow it to be able to grow further without any financial constraint, confirmed by the lowest D ratio, low cost of fund, a high number of land reserve. Plus, many fiscal policy and monetary policy that have been already implemented help Global to boost their consumption in their strategic areas. Despite the concern in digital wallet, there will be higher chance of rate cut, and also many stimulus packages has been injected already. And for the long-term trends such as urbanization, two mega projects like Motorway M6 and Thai-China high-speed railway are on the right track, picturing the positive clear picture in housing demand of northeastern region sector in the long term. Therefore, by incorporating all the risks, we believe that Global had wide open upside at over 30% and only 10% downside risk.
Therefore, we reaffirm our buy recommendation for Siam Global House due to these three key reasons. First, its turnaround potential. Second, its long runway of expansion. And third, its expanding margins. Once again, Siam Global House is not only poised to improve homes, but is also poised to improve shareholder returns. Thank you.
I have a couple questions. So I'm just going to ask those questions now and then try to answer them. So the first one is, I would like you to tell me more about your analysis that you did about the districts. So that's the first question. So tell us exactly what you did. The second one is, you showed a ROIC of 7.7%. What is the weighted average cost of capital, and help us to understand the difference between those two. Those are my two questions. So if you can speak about the first one, and then after that, discuss about the cost of capital and the ROIC.
I would like to answer the first question about the tier criteria. So we have identified the key criteria from the past districts that Global has gone into. And then we analyze the past characteristics.
Yeah, just if you can tell me, like, where'd you get the data? What data was it that you were using? And then how did you manipulate that data to come up with your conclusions?
Thank you for the question. So as you can see, we observe all of the past observation from the district population, average income per capita, and population total store. We can know how this company select the district to expand into. And we also select the criteria of the population income per capita to select these three tiers to be conclude. Yes. And
just want to ask, is this done by the company or is this done by you?
Done by me, but we based on the past observation and the global management guideline. And for the cost of capital, right, for 2023, the ROIC of Global is at 7.7%, but this was the impact by the lower steel price. In the normal case, it would be higher than this, and our weighted back is at 7.4%, which our ROIC is higher. Yes.
Just so I understand, it seems like they're pretty close. right? Are you saying that the future ROIC is going to be much higher than 7.7? Is that what you're saying? Or
The normal case, which is not impacted by steel, would be higher, and in the future, we project it to be even higher.
Hi, a quick questions. So there's one of the slide that mentioned 46% of the existing stores is competition free.
Yes.
Okay. So how do you define that?
Please
So-
see.
So you look into the satellite image.
Yes, as you can see from the right image, you can see that the distance between those stores in the main district and the tier 2 and 3 district is about 50 to 80 kilometers. And also, please, can you change to C4, appendix C4. As you can see, the last 10 global stores have been expanded into areas that have no competition. But if you can see other competitors, they expand into tier 1 district that already have a lot of competition there.
So you look into this satellite image.
Both satellite image and data from each district.
A little bit on this. We want to clear that the main target of global and other home improvement retailer is to capture the traditional players. So which we mean by the competition fee is that in the tier 2 and tier 3 district, there is no other dominant player in that area, which means global can fully capitalize on the long runway of replacing traditional player, like I said, by their competency.
Understood. Second question is also sort of related as well. You use another big word, exclusive expansion into tier 2 and tier 3. So exclusive means nobody else is going to do the same thing, right? Now the question is, why do you think that is the case? Do you think that Do Home, Thai Wasadu, they don't have, what are they lacking? Or is it their decision not to do the same strategy? I want to hear your thought.
So the reason why the other player cannot enter into this market is their current business model. As you can see from this slide, Home Pro is focused on the price base, meaning it's make the profit mainly on the margin, profit margin, and their product have higher price compared to peers. And as the tier 2 and tier 3 have lower income per capita, meaning that price sensitive, so the current product mix of Home Pro will not be able to enter in this market solely. So for Do Home and Thai Wasadu, the product mix is rely on the soft line or construction material, which have very low margin and require very high demand. So demand in tier 2 and tier 3 district might not be sufficient to cover their requirement of demand.
So you think none of these competitors has the ability to adjust their format and their sales mix and compete with global in these tier 2 and tier 3?
Yes, I think they have ability to shift, but as of now, there's still room to open in tier 1. And global is a sole player who expertise in playing in this area, and their product mix is suitable for this one most. As we can see, can you go to product mix? Like product mix of Home Pro and Do Home and Thai Wasadu, as I said, is construction material. So they have very low margins. If they want to produce the furniture and some stuff like that, it might take some time to make it marketable. However, the global product is already marketable. Moreover, it also provides discount compared to the peers, meaning that if you compare between the standard American standard product and the global product, global offer a cheaper product with the same quality, which will suit more with tier 2 and tier 3 customer.
Sorry, just want to be perfectly clear here. So you're saying that they cannot do the same, or they choose not to do the same. This is very important.
What we mean by that is that other competitors might change their business to enter this area, but they have no reason for doing that during this moment because the tier 1 area also left and there is a room to capture, right? So the competitor have to take time, which means during that time, over the next 3 or 4 years, global will be the solely player in this particular tier 1 and tier 2 area to capitalize on the opportunity.
maybe a few more questions from here. You also forecast that the EBITDA margin will increase quite significantly over time. Perhaps can you show the trends of the increase in EBITDA margin? Do you have any?
I'm happy to take that. Could you go to slide thesis 2, number 11. Yes.
Okay.
This is the trend of EBITDA margins.
Okay. In your forecast assumption, what would be the major factors of these significant margin expansion?
Yeah, could you turn to EBITDA margin breakdown in thesis 3? It would be a private label sale and also the labor automations, which is the main cost of the company, which is the
Which one has higher weight on
It's a bit of private label sale that contribute to higher EBITDA margin.
because of the higher proportion of the private label sales?
Yes, and it's contribute a higher gross profit margin, about 20 bps compared to the normal products.
I spot that you put an assumption on cost of debt around 3 point something percent. How's that number compared to what they actually, what is actually cost of debt they currently compare, and what's your assumption for that number?
All right. Can you switch to the appendix G WACC, please? I want to address that the cost of debt is derived from the methodology that we derive from adding the credit spread on top of the risk-free rate, which means these 3.46 is come from the risk-free plus the spread. And we think this is appropriate cost of debt for Siam Global House.
What do you know what is the current term that they pay for those debt they already?
We cannot access that information explicitly, but we think this approach should be the best way that can derive the cost of debt.
Okay, thanks.
All right. Well, thank you for your presentation. So this is the time. We have a 5-minute session for the feedback and recommendation for your improvement in the future, and this will not affect your score.
Okay. I thought you did a good job, and the couple of things I want to highlight. First is, at the beginning you talked about government disbursement that that was coming out, and you also talked about water reserves. But these government disbursement is something that happens every year. So it's sometimes not that convincing that as an argument. The other one is water reserves. Again, that's one period of time that could change quite dramatically. So those arguments, I think, are not the strongest ones that you can come up with. Also, when you said competition-free, I thought that was a good way of trying to refer to it. But I think, is it correct in saying what you meant is modern competition in modern trade? It's free from any competition with any modern trade. Okay. And then the last thing is, I was asking you questions about the research. If you've done any type of independent research, whether that's a survey, and this goes for everybody when you're doing research on anything, most people don't do any research. They're just reporting numbers. If you've done any research of a survey or some analysis to break something down beyond what you're given from the company, make sure you highlight that as your independent research so that the client or the listener knows that you've actually done something different than what others have. That's it from me.
Hello? Right. So I think overall, good presentation, good pace, good pose, quite professional. I like it. It's a by recommendation, so I understand that you need to back it up with a positive argument, right? But my comment would be that some of the argument is a bit oversold. It sounds like a hard sell. For example, there was a chart comparing Thai GDP with the region, and you're saying it's good. It's not, right? It's 3%. the rest is much higher. The chart is not supporting you at all, right? And you use a couple of other big word, right? You know, big word is dangerous. For example, competition free. That is, you're pushing it a little bit, right? And then you use the word like exclusive, expansion. It's not really exclusive, right? It's more like a window of opportunity, right? So, so when you use big words, that's bring in a lot of questions, right? So you need to defend that, right? So you open up your argument yourself to a lot of questions. So that would be my comment. A little bit on the presentation. So overall, you know, it's excellent presentation, but I just want you guys to smile a little bit more, right? At the end of the day, you know, it's, I know you're nervous, but at the end of the day, this is a pitching presentation, right? You're trying to sell something, you're trying to recommend something, right? So, you know, even if you're nervous inside, smile a little bit, you know, send out, you know, positive vibe and everything, right? So, but good job.
Good presentation. You address all majorities of the key point that we don't have much of the question beside on the competitor analysis. Overall, I think you address you know, the key factors very well, but perhaps a little more suggestion in terms of a competitor analysis. I think the judges sort of tend to agree that it's a bit too positive in a way. In reality, if there's such a good opportunity like that, very quickly that will be competitor. So you might need to be a little bit careful when you discuss, you know, the competition landscape and all. It doesn't have to be the existing player. It can be like also the new player as well. A bit more. I didn't ask during the Q&A, but there also must be a reason why, you know, other people, even that also the new player, are not in that area. Perhaps typically, if it's not very in town, the purchasing power is actually very low. So that could also impact your, you know, store sale assumption as well. So you need to bear that in mind. The rest is actually pretty good. On Q&A, I think there's a bit of, you know, low confidence in some of the questions, not so clear on certain questions, but overall very good. Thank you.
Good presentation. I like how you try to do your own research on the 2060, even though it's not, I mean, it's not quite exactly clear to me how you've done that, but that's good effort. But I think on regarding my questions on the cost of debt, you can find more information on the financial notes. There are more exactly, I mean, explicitly, some information there that you can find. Yeah. Thanks.
Thank you, the judge, for recommendation. So thank you for Team C. You're welcome to stay and watch the next team. All right, welcome Team D. Feel free to begin your presentation whenever you're ready. The timer will start when you do.
It's the companies that pioneer in the upcountry regions. It's the companies that keep challenging its status quo through transforming business models and innovations. Well, I'm talking about Global, the king of northeastern regions in terms of construction materials and home improvement products, with a resonating revenue CAGR of around like 10% and immense profits of around 25%. Across 80 home centers in Thailand and 30 home centers in ASEAN. But wields its competitive advantage of being the first movers in northeastern regions and being the innovator last, let's see its changing business landscape. So although macroeconomics are turning to a more favorable ways to global, we see domestic competition remains a key concern. Therefore, we initiated a whole recommendation with a target price of 16.04, representing an upside of 1.5% for three key main reasons. First, there are growth potential available to global. Second, global cost strategy has some value yet to be unlocked. And thirdly, international opportunity despite intensifying domestic competition. So let's first start with our first question. Are there any growth potential for global?
Yes. We observe opportunity growth in the average sales per store and store expansion strategy. For the average sales per store, we expect to continue to grow based on two dimensions. For the first dimension is farm income that reflecting in customer purchasing power. And the second is construction material index growth that reflecting in increasing spike. And moreover, we expect that average sales per store is driven by farm income and construction material index growth. And moreover, we expect that the farm income growth is driven by agriculture price and production index. However, El Nino is a key concern in the first half year 20 and 24. So we project that the farm income continues to grow gradually by 1.78%, which is less than construction material index growth by 40 basis points. And however, we still believe that the global can maintain competitive pricing with evidence for the 8 years ago, despite increasing in construction material index growth. And as a result of increasing trend in tourist industry, and the past 2 years ago, global has only 21 districts out of 900 districts in Thailand. So we project that the expansion strategy in tourist area district will create a new dimension for global revenue growth. And however, we still believe the expansion strategy would not pose a key concern to global financial health, given the strong careful form operating to liability ratio.
Well, what about the cost? Well, we see some possible value yet to be fully unlocked from global's current cost strategies, namely its house rent product strategies and its environmental initiative, despite some short-term concerns on rising electricity costs. Firstly, we believe that Global can propel its GPM to the new height of 28%, given that its focus on the current strategies on house brand products, and that house brand products harbors around 30 to 40% GPM, 10% higher than non-house brand products. Moreover, we also observe an increment in the house brand products to total revenues of around 1% in each year, along with the growth in the gross profit margin. Secondly, we believe that Global's environmental initiative can enhance global G&A expenses by 14% on average. It is given by the fact that we observe a fall in the utility to G&A expense despite increasing FTE rate during the past 5 years. This coinciding with the commencement of the environmental strategies on electricity consumption and water consumption. And this merit is yet to fully realize, given the company's long-term goals by 2027. Nevertheless, unfortunately, these will be offset by the external concern of rising electricity costs by 10%, given by the current situation where the government actually capped their electricity price to a certain level, despite the Electricity Regulatory Commission having some accrued FT costs. This may potentially trigger a higher electricity cost later during the year. In short, well, cost of goods sold to improve, OPEX to improve, despite being offset by external concern of the rising electricity costs.
So the next question is, what about competitive landscape? Well, we see a revenue upside from the AAC region, but intensifying domestic competition may pose profitability constraints in the future. Firstly, global expansion strategy secures quick win by targeting countries with similar customer behavior, leveraging resource synergies, and forming a strong partnership. Having successfully executed in the first stage of expansion, Global is now ready to expand to the second stage in the larger countries, starting with Indonesia and Philippines. Our projection indicates robust growth rate of 14.34% over the next 5 years. However, the industry success has resulted in the search of competitors. As you can see in the graph, Thai Vasadu, who is global closest competitors, which backed by Central, has demonstrated the substantial growth, surpassing Global in sales, despite operating with lower branches. Moreover, competitors also show the better inventory management, and if Thai Vasadu could manage to increase its house brand product to match global level, it could lead to Thai Vasadu reaching global gross profit margin, allow them to offer more attractive promotions and prices. This factor could pose potential challenge for global gross profit margin in the future.
Next, what about ESG? Well, Global has made significant strides in environmental responsibility, especially through the widespread installation of solar rooftop in every stores, resulting in a remarkable 53% reduction in carbon emission, which is substantially lower than industry peers. However, a challenge persists as Global will remain accountable for 0.48 kg per kilowatt. Looking ahead though, Global is fully committed to self-generate 60% of electricity consumption by 2027 and translate into a 12.5% reduction in carbon emission. Next, global social aspect remain neutral, with suboptimal human management in terms of safety and employee training. However, company fair remuneration contribute to an exceptionally high level of employee satisfaction.
Furthermore, Global's ability to persist through the COVID-19 pandemic and outperform both the market and the industry strongly signifies its strongly fortified corporate governance. However, this could be a double-edged sword, as almost half of the executive position and more than 30% of the shares are being held by the founding family. This leads to a concentration of power and influence within the company. And even though the board composition remains up to standard, its chairman is not independent, which could lead to a risk of oversight and the conflict of interest. So in summary, our team's overall view on global ESG remains fairly neutral, with improvement that certainly can be made across each aspect. But has the market price fully reflected our team's thesis? Well, our team's based our valuation on the discounted cash flow model with a target with a WACC of 8.87% and a terminal growth rate of 3.27%. And based on a DCF model along with this assumption, our team therefore issue a whole recommendation with a target price of 16.04 Thai baht, representing a 1.5% upside from the last price. And additionally, our relative valuation further affirms the overall consistency as the target price falls within the range of the valuation, and this is further supported by the sensitivity analysis of WACC and a terminal growth rate on share price. And after we have a better understanding of the share price, many of you may wonder, is there any investment risk? We have identified 4 key risks, and we will be presenting the 2 most impactful ones. First, the competition risk may arise in both domestic and international market. However, Global could mitigate this with its consistent renovations and a versatile marketing campaigns. Second, the continuation of electricity bill cap could lead to a price surge. However, Global will partially be mitigated by this risk due to its commitment to cover more than half of its electricity consumption with solar energy. And after we have taken 4 key risks into account of our Monte Carlo simulation, we therefore arrived to an average price of 15.63 Thai baht, further strengthening the robustness of our recommendation. And with 3 key reasons: growth potential, the cost strategy value to be offset, and intensify competitive landscape, in combination with our fairly neutral view on ESG and a fairly value share price that is robust to risk, our team therefore issue a whole recommendation on Global. Thank you. And the floor is open for any questions you may have.
Okay, good. one of the questions I have is, and I've asked this of other teams, is that you talk about the solar panels. You know, the beautiful thing about capitalism is that we are always trying to reduce costs, right? And trying to reduce everything we can to keep our profit margin. Isn't the installation of solar panels just a good business decision? Why does it become an ESG decision?
So Global has been long committed to install free space that they have with solar energy, and they wanted to convert the usage of electricity from coal to solar energy, and that's why we believe that it will have a good benefits in the long run.
Okay, and the other thing that in the world of valuation, small changes can make big changes in buy, sell, hold. What I'd like to understand is that are you more towards a buy or more towards a sell here so that we can understand a little bit of your thinking? Thank you.
Well, we primarily is more toward to the sales, given by the fact that we see the risk in the intensifying competition. But for the upside, we just see some opportunity that the management feels positive about expansion. But based on the ground facts, we believe that competition is something that's more realizable than opportunities. Therefore, we more toward the sales side.
Sorry, can you go back to the one of the slide that you talk about the overseas operation?
Could you go to thesis 3 in the main deck? The next one, the next slide. Yeah.
Right. Okay. So when you do this, I'm quite confused about first expansion and second expansion. What is that?
So the first stage expansion that they already executed, which is in Myanmar, Cambodia, and Laos.
I see. And it's a bit unclear here, but what would be the impact from these net sale from the AEC area to Global as a whole, as a parent company, taking into account their shareholding and ownership in these subsidiary?
So in 2020-22.
No, I mean forecast. I'm not talking about the past.
We expect the net sale from AAC region will account for 2.88% of total revenue.
Which year?
In 2027.
Okay, so 5 years from now is 2.88% of the sales. How about the percentage of profit or EBIT or any profitability measure that you calculated?
They receive.
Well, we didn't really put it out like the partial fraction of this international expansion into the EBIT. From the cost side, we just focus more on like gross profit margin expansion. Yeah. So we didn't put it clearly like this is a contribution from the international expansion after that revenue. Yeah.
So you didn't break it down?
Yeah.
So you implicitly assume that the profitability of these branch outside Thailand is exactly the same as Thai branch?
Yeah.
Okay. Just curious. Because some of these companies, they do not hold 100%, right? They're actually, in some cases, they're a minority, right? They're just strategic investors. So how do you take into account the minority interest?
Well, we just take like the percentage shares in there and then just came up with the revenues, right? And then their profit and then just partial of that profit back to the income statement.
Right. Do you have a slide that show the percentage of minority interest in your projection?
Could you go to appendix pro forma assumptions on financial statements? Sorry, could you go back to the appendix network first? Yeah. The previous one slide back, income statement, yeah. Financial statements, yeah. In the D financial statement, yeah. So basically, we have the line on shares or profits of joint venture that represents partial holdings in those international expansion. Yeah.
Okay. So you don't think, based on your projection, there is zero growth? So because last year is 119, 2027 is 116. So you think 5 years from now, 4 years from now, Global cannot grow their overseas contribution of share of profit from overseas expansion at all?
We just assume just normal growth, and then we didn't take into account the increase in shares of the Global. Yeah.
Okay, understood.
Okay, maybe very quickly on your risk assessment. I saw the slides showing that you think that the biggest risk probably be on the electricity cost and the competition, right? One of the key factors that perhaps sort of leads to a growth in your forecast is actually on the margin expansion, particularly on the household brand. What is your thinking on the downside risk of that area?
Thank you for the question. The downside risk for the gross profit margin would be the intensifying competition that could pressure their ability to price their products in a competitive way. That could pressure their gross profit margin. But for that risk, we take into account as a falling in the sales instead. In the competition risk, that like a reduction in sales.
I'm actually asking about the house brand. That is part of the strategy you present, that there's a initiative to increase the house brand.
Could you rephrase the question again?
So your assessment in risk is actually on the competition as well as electricity bills. But one of the global strategy is the attempt to increase the portion of the house brand. What is your thinking on that in terms of risk, and how is that impact your valuation in the case that they cannot really achieve what they have target for?
Well, we think that the risk is pretty much trivial, given that the historical fact that it can continually increase its house brand products to its total revenue of around 1% during the past 5 years. Therefore, we believe that our forecast is pretty much sounding as we increase something lower than that. Yeah.
And also to add on, can you go to the war risk in F? So like we take into account since the house brand, most of the products are being imported from China, and there has been numerous geopolitical tensions that could lead to higher freight costs. And we have taken into account in terms of the cost of goods sold per sale that could potentially increase.
You mentioned that electricity bill cap is one of the key risks to highlight. So what is the portion of electricity bills as a total expense?
Could you go to pro forma assumption on G&A expenses schedule? And then next slide. Oh, that's one, yeah. The statement, the financial statement, yeah. So I think electricity is around 1/6 of the total revenue, total cost, G&A expense cost, yeah.
1/6. And okay. You touch a bit on the independency of the president and the chairman. So why is the problem for you?
Well, for us, I think this is one of the concerns we should raise, but not like a downside. This is because one of the code in SEC, I think it was 2017, it required the chairman of the board to be independent. And then we realized in the annual report that the chairman is actually dependent with one of the executives. And we therefore provide you with a reasonable doubt that there might be a risk of oversight. And also, we may not have presented it here, but there's also a risk of the diversity.
All right, time is up for Q&A. Now we will have a 5-minute session for feedback and recommendation. This will not affect your score.
Okay, good presentation. I think one of my hard parts about this presentation is it felt a little bit like a data dump. And part of it is that you know, rather than showing, let's say you have 3 parts to a slide, rather than showing the first part and helping us digest that, and then the second part and then the third, you put them all up there. And that caused, it's just a lot of information. So I think that's something that you've got to get away from the slides being too busy. Also, 2 of the guys on the ends of here, when you guys spoke, it with all the information that was coming on the slides, and then you're kind of a monotone speaker a bit, then it was like, what? I was having a hard time. So remember that you're telling a story. Ultimately, right? You're not just dumping data. Data is supporting a story. So my main advice is bring more energy across the team to that story. That's it for me.
For me, I give you 10 out of 10 for valiant effort on trying to recommend a whole on any stock. It's difficult to defend. So you're taking on a lot of a challenge from the very beginning, and it's clearly show. I have a very hard time trying to understand your argument because you open up with the questions, right? Why, what, you know, it's a 4 main question and you're trying to answer it. And by the end of each question segment, I still don't know what you're trying to say, right? Because you're arguing with yourself. Like, okay, so we're kind of positive about 1, 2, 3, but also we are concerned about 1, 2, 3, right? So I get you, you know, you're trying to sort of show this balanced approach, right, that lead to your whole recommendation, right? But again, you have to separate into 2 parts, right? So whether this is a good company, whether you like it or not, and then there's a valuation part, right? So there's other way to defend your whole recommendation. You get what I mean? So it's a good company, it's just too expensive. The message is much clearer, easier to digest. So that's my most important comments and actually my concern about this presentation as well. But I want to reiterate, 10 out of 10 on valiant effort, trying to do the whole recommendation. All right.
Thank you. Good presentation. A few comments here, though. Basically on the presentation side, aside from the pace of the presentation, it's a bit unequal, one by one, each of you. And some of you probably need to, you know, be less excited with a lot of movements around when you present. That's sort of distracting a bit, right? On the content, I think all the judges already have the questions. I only have one point that would like to know to the team. I've seen your WACC calculation that you use cost of debt of 1 point something %, which is obviously lower than the risk-free rate that you use as a main assumption as well. So that's something that you, perhaps, I don't know if it can be edited, but for your next assignment or work, something that you need to bear in mind.
It's very, electricity bill, for me, is not a key risk to highlight. So that's one thing. Index living more, for me, is not a comparable peer. far more different. So you don't have any reason, but it's good that you don't mention much, anything about it. And what else? And you mentioned a bit on international expansion with synergy, but those number assumption that you put is not consistent with you want to try to say at the beginning. So make it consistency with your rationale and what you want to highlight.
All right, thank you for the presentation. Now that we heard from all the teams, we're taking a brief pause to allow our esteemed judge to finalize their score, and we will be announcing the results shortly. So thank you for your patience. We will start again at 11:40. distinguished judge, CFA board members, professors, research challenge finalists, contestants, and esteemed guests. I am honored to stand before you today as we come to the final stage of the CFA Research Challenge in Thailand. On behalf of the entire Research Challenge team, I extend heartfelt congratulations to each participating teams for your effort and commitment throughout these last 5 months. I know that it's not easy to balance the intensity of this competition with your schoolwork and personal life. Not everyone could keep going, but you all did. This journey I hope that it has been one of the valuable learning and self-discovery for all involved. I would now like to recognize the significant role of our judges who have played today. Their expert feedback and probing questions have been instrumental in the success of today's research challenge. Their dedication and insightful decision have brought us to the moment that we all been waiting for. All right, so with this in mind, I am honored to invite the president of CFA Society Thailand to the stage to present the token of our appreciation to our esteemed judge. And please join me in welcoming Kun Sornchai Suneta. And let's give a big round of applause as we invite our judge to the stage to receive their tokens of appreciation. Please welcome Dr. Andrew Storrs. Please welcome คุณมานิตา ภูวัฒนเศรษฐ์ Please welcome คุณพัชรชัย พุทธิกุลสถิตย์ And last but not least คุณวสินทร์ ปริทัน โอเคค่ะแขกทุกท่านค่ะช่วยยิ้มหวานให้กล้องนิดนึงนะคะ Okay, thank you all. Alrighty, so we're moving on to a very exciting part of our event. This is the moment we're all waiting for, announcing the winners of the Research Challenge in Thailand. We will begin with our second runners-up. Please note that we have 2 teams in these categories, and the order that we announced them do not reflect their scores. All right, so the 2 second runners-up, the first one goes to Assumption University Martin de Tour School of Management and Economics. And another second runners-up goes to All right, so we wait for their turn first. My bad. The second runners up, another team goes to Chulalongkorn University, Chulalongkorn Business School Thai Program, Team D-Dog. All right, so the moment we all have been waiting for has finally arrived. It's my great honor to announce the winner of the CFA Research Challenge for the 2023 to 2024 season. And the winner is Thammasat University, Thammasat Business School, Team B-Boy. Congratulations. So the first runner-up go to Team Chulalongkorn University, Chulalongkorn Business School International Program. Please come forward to the stage to receive your trophy. น้องๆสามารถช่วยถือช่วยถือป้ายด้วยนะคะ Let's give the first runner-up team another round of applause for their incredible performance. Well done. It is time for us to celebrate the winning team. Please join me in giving a big round of applause to the winning team of the CFA Research Challenge. Congratulations, Thammasat University, Thammasat Business School. May I also invite advisor to the stage as well? Congratulations to our winning team for this remarkable achievement. Your dedication and commitment to your studies have truly paid off. We hope that you all will continue to strive for excellence in all that you do, and this experience will be a stepping stone toward even greater achievement in the future. All right, I'm excited to share that the winning team will be awarded a grand prize of 50,000 baht, generously sponsored by Kietnakin Patra Financial Group. Let's welcome the Managing Director, Group Head of Investment Banking and Capital Market, Kun Anuwat Ruomsuk from Kietnakin Patra, to present this prize. I would like to invite Kun Sonchai, Kun Pasawut Vidai Niran's Research Challenge Chairperson, and Kun Manita from Kietnakin Patra to join us on the stage. Once again, congratulations to our winning team. All right, so on behalf of the entire CFA Research Challenge team and CFA Society Thailand, we extend our deepest congratulations to every participant for your excellent work. And thank you for being a part of our CFA Research Challenge this year. Thank you to everyone who joined us here and to all those tuning in live. We hope this competition has been a source of inspiration for future finance professionals. Everyone have a great day. Thank you. All right, guys, so now let's have a group photo with all teams. May I invite the judge to the stage? And the other three teams, get ready. I'm about to invite you.